this way. Peter Cardillo is also ready. Is he ready? Yeah, he's ready. Good morning, Peter. Is it, for emerging markets, is it too late to get bearish? And for US market, is it too early to get bullish? Can I put it this way?
Well, I think, the tariff situation is impacting the global markets. And, if this continues here in the States, then I think it's safe to say that the global markets, especially the emerging markets, will continue to act accordingly. And so the situation here is very tense in the sense that the administration continues to go back and forth on tariffs. And so there's no clear vision of what's really happening. For instance, yesterday, Mr. Trump announced that he would postpone tariffs on aluminum and steel, that is on aluminum and Canadian steel. And then that was after the Prime Minister of Ontario, Ford, who postponed raising electric surcharges. And so, we're seeing this tug of war. Hopefully, at one point, there might be some negotiations and we'll have a clearer picture. But until then, I think the markets are going to stay rather unsettled.
What will settle the market, Peter, then? Because this entire rollout, rollout, it's just going to make markets nervous. It will make corporates nervous. It will make the trade watchers nervous. I mean, what does one do in this kind of a world when US President himself doesn't know what's coming next?
Well, if I heard you correctly, I'm having a little difficulty in hearing you. But if I think it's it's important to realize that even though the Trump administration is saying that tariffs will boost the economy, I think if you realize the impacts of tariffs, they'll be inflationary. They'll probably cut into business, and so that means lower growth, and that means lower earnings in the future. So it's, in my opinion, it will be negative in terms of slower growth and in terms of slower earnings, and that will impact right across the globe. The situation prevails. I mean, if you have a trade war, each country is going to feel the effects of perhaps higher inflation and slower economic growth.
Okay.
Yeah. Peter, the other thing is about, the dollar move. Does it mix, or rather, is it a fair assumption to say the dollar may have peaked out in the near term? Because that has a bearing on the way the emerging market flows as well move.
Yes. Well, the dollar has been weak due to the tariff situation. And if you measure it by the dollar index, we're probably going to go a little bit lower. I think there's a good chance that we could see 102 on the dollar index, and certainly that's a hefty drop from just about 4 or 5 weeks ago when we were trading between that 107, 108 level. So that's going to be another problem, in the sense that any country that has a strong currency that helps contain inflation, and certainly here in the States. And so the lower the dollar goes, the chances of inflation, of imported inflation heating up, is greater.
Okay, Peter, great to have you on the show this morning. Thanks for that perspective as always.
If you like this video, then like, share and subscribe to ET Now.